Hi everyone, my name is Darryl Panes, CEO at As Good as Gold Australia, and this evening, once again, I'm sitting here with my brother Brian and partner at As Good as Gold. And this evening we interview a very special guest, none other than the founder and managing partner of Matterhorn Asset Management and Gold Switzerland. I'm talking, of course, of the one and only and legendary Egon von Greyerz. Good evening, Egon.
Good evening, gentlemen. Very good to be on your show. Really look forward to talking to you.
Thank you, Egon.
Yeah, thank you so much, Egon. I mean, it's just an absolute pleasure to have you on the show. We have been watching and listening to watching you and listening to you and reading your editorials for a very long time now, and you are a legend in the industry. Lots to discuss this evening, but I thought what we might do, Egon, is just chat a little bit about an upcoming event that's going to be taking place here in Sydney, Australia, in October. And I'm referring, of course, to the Gold and Alternative Investments Conference, held in Sydney, October 24th through to 26th, so it's over 3 days. We have some wonderful speakers at this event. Just to name a few, we've got John Mulligan. John is like the World Gold Council. We've got Shay Russell, Daily Reckoning. Richard Hayes, of course, CEO of the Perth Mint here in Australia. And of course, Egon von Greyerz as a keynote speaker at the event. So this is going to be an event that attracts people from all around the world. We're lucky enough to have it here in Australia. I believe that Egon, you've quoted Egon that you've been to 3 of these events already. And spoken at the...
2, as far as I can remember, 2.
Okay, and spoken at those events. What I'd like you to do, if you could, is just share with our viewers tonight what they might expect to experience at an event like this, and especially with the caliber of speakers that we're expecting during that 3-day period. Could you convey your thoughts to our viewers? Thank you.
Yes, no, I really look forward to it. I'm an old timer at what was called before the Gold Symposium. I think I was there first time around 2011 or 12. I mean, Carrie Stevenson is fantastic. She's always putting on a great show, and there's always been good speakers. Obviously, a lot of good exhibitors, mining companies, and I mean, I remember the first time I was there, I met people like Eric Sprott and John Embry, who are from Sprott, both of them are legends in the industry, and extremely nice people. Second time, I remember also one of the many speakers was Jim Rickard. So, I mean, and it's always been incredibly interesting, both the presentations as well as the contacts you make at the show there. So I don't expect anything different this year. The first year I think I was there, there were about 600 to 800 attendants and a great enthusiastic crowd on top of it. And I think half of the audience wanted to chat with me afterwards, which was impossible. But anyway, so, I very much enjoyed it. And I think everybody who goes there will also enjoy it. And right now is the time to go. We've had 6 lean years in the gold and precious metals industry, but now that is changing. We are now continuing the very long uptrend that started around the turn of the century, around 2000, and we have made a break since 2011 and a long sideways move for 6 years, and now we've broken out of that. Of course, I'm talking now in US dollars, because in many currencies, and we might come on to that later, in many currencies, gold is making new high, including your weak currency, unfortunately, fortunately for the gold holders, unfortunately for the people who have a weak currency like the Australian dollar. So we have new highs in Australian dollar, in Canadian dollar, in the pounds, in the euro, we had new highs, Swedish krona, so lots of currencies. So gold is now in all currencies making new highs, or in the case of the dollar, continuing the strong uptrend, and the dollar gold is going to make new highs soon also. So this is the time, and we are now continuing a long-term bull market in the precious metals, in the physicals, and also in the gold or precious metal stocks, and that's going to last many years. This bull market. So we're just at the beginning, and the show like what we're now going to see that Kerry puts on in Australia or in Sydney, that's going to be absolutely very important to attend to understand what is now going to happen in this market in the next few years.
Yeah, look, I'm inclined to agree with you. I think the timing is absolutely perfect, and Kerry does do an amazing job. The one thing that I'm still trying to come to grips with, we made contact with the Perth Mint today, and this is early stages in this bull run, and they are not able to supply kilo bars of silver for the next, well, it appears the next 6 weeks. They were at 6 weeks a few days ago, and now they won't even take an order. So I'm really interested to see what's going to happen here as this demand continues to increase, how available or accessible gold and silver are going to be. This is early stages, and we're already running into trouble. That's with 1% of the population having interest, let alone if it increases to maybe 2%.
No, I mean, let's face it, there will not be any gold or silver available I'm not going to say X years' time, but sometime in the future and not too far away. Gold is such a thin market. Silver is such a thin market. Yes. You asked about silver first. And there is very limited supply, and we agree with that. It's hard to, we can get hold of silver now, but it's not that easy. Once this market breaks out, and talking about silver still being well under $20, but I don't think that's going to last very long. Silver is going to break out to obviously 20, 25, and then also to $50. Eventually, I see silver going to several $100s, $500 plus maybe, and I'm still talking about in more or less today's money, not in hyperinflationary money, because then we can add a few zeros. So no, there won't be. And of course, if we get, which I expect will come also, if we get a failure at the COMEX, if we get a run on the physical, if people who hold paper, silver, especially because that's a massive paper short there on the COMEX. If they ever ask for delivery, there won't be any silver, and then it can shoot up dramatically, certainly to the levels I'm talking about. The gold market is a little bit, there is more stock there, and I reported only a couple of weeks ago, the Swiss refiners, who are the biggest in the world and refine 70% of all the gold bars in the world, they actually had very little demand, and they had stocks for the first time that, they actually had a very slow period. That is slowly starting to change, but I still think that generally the demand for gold, if I talk to people who are dealers, etc., that is not really happening yet, the demand for gold. Silver is more speculative, so that, and obviously that has now moved. The gold-silver ratio has started to come down from the 94 level now to into the 80s, and so that's really where the excitement is, and therefore I'm not surprised that they have high demand at the Perth Mint.
Huge. Look, we've been talking about, I mentioned earlier, we talked about the event, and I'm going to stay with what we're talking about, but we talked about the event. I do want to ask a couple of questions, in particular on Australia, where I don't think this event could have come along at a better time. We've already said that. But I think it should. Do you know what the MCG is? If I mention the MCG to you, Egon, would you know what I was talking about? Probably not. No. It's a big playing field here. We play football and cricket at the MCG, and accommodates 100,000 people. I would like to think, and sure, this event should accommodate those sorts of numbers. But because here's what I'm seeing. In the last GFC, 2008 through 2011, we pretty much dodged the bullet. You would have heard the reference to Australia being the lucky country. China saved us, and this time I don't think we're going to be anywhere near as lucky. I read an article today in the Sydney Morning Herald, one of our major newspapers over here, a special report titled a hard landing for China could put 550,000 Aussie jobs at risk. So the jobless rate based on that would go from 5.2% to 9.3%. I mean, if this happened, Egon, if we already have major issues with our real estate market at the moment, it would just absolutely destroy, it'd be devastating to our real estate market. So the reference to this impact or China having this experience, this hard landing, the reference to it was, or the reason for this was with reference to trade wars with the US, and we all understand that. An upheaval, upheaval, I should say, in Hong Kong, China's shadowy banking system, and a US recession. So all of these are very valid points. So they're saying that this could lead to a fall in Chinese growth of around 6.5, from 6.5 to 3%. So in May of this year, the Beijing Bank was the first Chinese bank to fail in 20 years, and two others needed government intervention. So China is obviously having their own issues, and our reliance on them is massive. This time, we cannot rely upon them. So what I'd like to ask you is this: what do you think Australia experienced here? Obviously, it's going to impact on us a lot more than the GFC did. What are your expectations there? What do you think we can expect from here on?
I'm sad to say that if you have read some of my articles and listened to me talk, I think Australia, together with the rest of the world, will have absolutely awful times in coming years. We've lived in a bubble now for a very long time. You can say we had been a bubble for at least 20 years, or you could say 50 years since 1971, and this bubble has grown ever bigger. And now, what I was always surprised by when I've been to Australia or talked to Australians is the fact that Australians always thought that they were isolated from the risks in the rest of the world.
Yeah, correct.
And I think that's a bit insular. Excuse me for being maybe a little bit rude, but Australia will not be insulated from what's going to happen in the rest of the world. And as you say, you are very dependent on China on top of that. And China, of course, is a bubble with the rest of the world. Chinese debt since the beginning of this century has gone from $2 trillion to $50 trillion. And the Chinese economy with the rest of the world is a bubble. And so we're talking about a global debt bubble. And China, of course, will suffer in line with everybody else. I think China will at the end of the day, if there is not a revolution or civil war in China, China will probably come out better than many countries, but that will be many years from now, for the simple reason that most of the debt is internal, and they will be able to sort it out internally, whilst the rest of the world is mainly external debt, and therefore that will be a worldwide banking crisis, while China to a great extent can contain it to their own borders. But nevertheless, if you come back to Australia, I think, as you said also, we all know that your property market is at the most massive bubble ever, and that will collapse totally. I mean, I measure a lot of things in gold, and I see, a property in Australia compared to owning gold. I think a property in Australia relative to gold will go down 95% in the coming 5, 6, 7 years. I don't know how long it will be. So, you're talking about mega bubbles here. It's not only in Australia, but it's around the world. But nevertheless, you've had one of the biggest property bubbles, and you combine that with, as you point out, the problems with China, and Australia will suffer dramatically. That's absolutely, there's no way of avoiding it. You're not going to be the only country, but you will, because of your dependence on China, it will be hard times for Australia for many years to come. I'm not a pessimist at all, All I do is, and that's just what I've done all my life, I analyze risk, I understand risk, and then I see how we can protect ourselves against the risk. I hope all these events will not happen in the world that I'm predicting, but I think there's a high chance that they will. So that's why it's better to be prepared and understand it than put your head in the sand.
Yes, yes. Well, so it all really gets back to debt, which is something that governments fail to talk about. It rarely comes up in conversation. And it's our reliance on debt, I think, that is such a big issue. Low interest rates, we talk about easy money. I once heard a gentleman by the name of Vern Gowdy, who's an economist, you may know him, Australian, and he said there's only one way to go broke, and that's to have too much debt. And that's how I see most Australians at the moment, absolutely and totally overcommitted, no savings at all. In fact, most people who invest in precious metals today, as I have found, have either sold a property and glad to have gotten out of it, or they've gained an inheritance, or it's through a self-managed super fund. Now, I don't know if it's the same all the way around the world, but that's what it appears to be here. What I've recognised is that very few Australians have any real savings at all. It's all gone. You know, they are living up to here week to week.
That's absolutely right. But sadly, that's not just in Australia. That's in America. That's in lots of European countries. People don't have any savings at all. And why should they have savings? Because when you earn no income on savings, the governments have now for a very long time destroyed the value of money by printing money and expanding credit, lower interest rates. So there is no incentive to save. The only incentive is to borrow more and more. And now all the central banks around the world have said that they want to increase inflation. Inflation is an evil thing. You don't want to have inflation. Inflation is bad for the economy because inflation increases prices for consumers and for the country, and therefore you shouldn't have inflation. But there is this fallacy among governments that they think inflation equals growth. Inflation doesn't equal growth at all. It just means an increase in money supply. That's all inflation means, and it's actually no advantage at all for the country. But that's what the central banks are on the illusion that we should have. We must have inflation, and they're printing more and more, and now they're getting to we have $16 trillion in negative interest rates now. So yes, the Australians are going to suffer like everybody else, as I said, and there are no savers in most consumer economies today, and therefore people live from paycheck to paycheck. And when that paycheck stops, there will be some point when the social security system will not work either, because the government will not have enough revenue, and they will have massive expenditure, and all they can do then is to print more money. But as far as I know, you cannot become rich by printing money, and you cannot solve a debt problem by issuing more debt. So therefore, this time they managed to push the thing forward in 2007-9 by printing and borrowing, guaranteeing 25 trillion or so. This time it will fail, in my view. They are going to start printing again very soon, but it will fail because, as a printed money has no value, and therefore now we got to the point when of total diminishing returns or zero returns on extra money. So the world is running on empty, and therefore this time the rescue actions that all the central banks will undertake in the next year or a few years will fail, in my view. And that's why it's going to be very tough for people, very, very tough. And it's best to be prepared in any way you can, because a lot of people will lose their jobs. A lot of people will have tough times.
Yes.
Yeah, Darryl and I both agree, certainly on that one. I got two questions here. I do read all your articles, Egon. I look for your name in any news reports or whatever. The other person I also listen to is Jim Rickards. You've mentioned him. I've read all of his books, listened to many of his interviews. And he consistently says a minimum of 10% of precious metals in any portfolio. Also, in one of his books, he also asked one member of a 12th century Italian family, he was sitting down with dinner, and what is their view? And the answer was 1/3, 1/3, 1/3, which in the explanation went on to say land, fine art, and precious metals. Egon, I would like to know, what are your recommendations at this point of time?
I know Jim has for a long time said 10%, which in my view is much too low, because the big landowners and the old families over time, especially in Europe, they have had land and gold and art. That's correct. I don't think many have had as much as a third in gold, but they've had always owned gold, always had physical gold. They're talking about old money now. But there are times right now, I think, yes, productive land is still going to be okay, although land is now very expensive. So I think you're going to pay a price which is probably too high. And art also is now an asset which is overbought and is part of the bubble assets, in my view, because a lot of the wealth that has been generated by the very wealthy in the last few decades has gone into art. So in my view, art is not a good time to invest in now. So coming back to gold, well, my view is that you should have a percentage, the percentage you're comfortable with. In our view, you should have, most people that we know have at least 25% in gold. Personally, I would be happy with a lot higher percentage, a very much higher, because I don't trust the banking system. I would not keep any major assets in the bank, and that includes the bank's custodianship of stocks, etc. Because if something happened to the banks, you don't know if they're going to use your stock for margin or security, or if you're going to get your stock back. If the bank closes, it might take you years before the bank has sorted out, or the liquidators will sorted out the bankruptcies, and therefore, so in my view, banks are risky institutions to put major assets with today. I know that almost everybody who has money has to through the banks, either in cash or in stock. So most people will disagree with me. Nevertheless, from a risk point of view, I think banks are not a good risk in the coming years. So I'll be happy with 50% or more in physical gold and silver outside the banking system, of course, because otherwise you're not protected, and preferably also in a safe political jurisdiction, so that that there won't be a revolution or confiscation. But I'm extreme. Everybody has to hold as much gold or silver as they're comfortable with. But as you rightly also said, that most people, there's less than 0.5% of world financial assets in gold and silver. So therefore, most people don't hold it, and most people will not buy it, and there will be a few who will rush into it now when the next big bull market in precious metal comes. But sadly, most people will not be protected against what is going to happen now in financial markets and in the world economy, and that's very sad. But we always have had cycles throughout history, but the cycles are now exacerbated by central banks' manipulation of markets. If we take the normal course of events and reach bottoms, then the extremes and banks are now creating by constant interference and by manipulation of interest rates and of money. So therefore, this bubble is the biggest bubble in history ever, because it's every country in the world, and therefore, sadly, the outcome of the next crisis is going to be very severe.
You've probably answered my next question, but it was going to be, would there be any circumstances that this ratio of 10, 20, 30% rise to 50%? I'm agreeing with you 100%. But if you could evaluate there a little bit more on what would come about for you to say, yeah, the average person should have more than 20% into gold and silver.
Well, I think Egon's saying it now.
Yeah, look.
Well, it's a good question because any financial advisor would say that it's irresponsible.
I agree.
5 or 10% in anything, and especially not in a volatile commodity like gold or silver. That's what they would say, because 99.9% of all financial advisors do not understand money, do not understand gold, and therefore, and also more importantly, they make no money on it because they want to churn commission, and therefore they don't recommend gold or silver. What I ask myself, and sometimes when clients come and I'll say, well, shouldn't I have more diversified portfolio? Shouldn't I sell some gold? I said, yeah, or take some profit, because we have clients, we started in 2002 and recommended then to the people we advised to go heavily into gold already then. So they made in like in Australian dollars or in pounds or in Swedish kroner or not as much in Swiss franc, but many have made 6 times the investment. It's better than any other investment that you could have held. So they're asking, shouldn't I take some profit? Yep, my question, yes, but what are you going to do with the money? The risk is still there.
Yeah.
Elevated, the risks are there, and where are you going to put the money?
Yeah.
So you put it under your mattress, and the government, I can guarantee you that the government will continue, but now in an accelerated fashion, to destroy the value of your money. Yeah. So therefore, we are in this race to the bottom, and that race, only since 1971, most currencies are down 98% or so against gold. So, and if we take gold as stable purchasing power, so there's only a couple of percent to go, and that is absolutely guaranteed that will happen in the next few years. And the governments now, and I've indicated that or talked about that in a recent article, I said, what the governments are doing now, especially in August 2019, is to me very similar to the event in 1971 when Nixon took America off, or the dollar off the gold backing. The united front of all the central banks indicating we are going to print money, we are going to support the market, and that's across the globe. That is from Japan to China to ECB to the Fed, everywhere. To me, they are panicking and they see what's coming, and therefore they are now they're most probably coordinating this. And then they're also seeing what we are not seeing only in the share price or in what we read in the press, but they're also seeing that banks like Deutsche Bank, as an example, or Commerzbank, etc., they are bust, and that it will not be much required for them to go under. And if you then and still they haven't got the derivatives on the balance sheet, and their derivatives like Deutsche Bank is almost $45 trillion, which is about 15 times German GDP. It's a disaster waiting to happen. So the central banks are aware of all of this, and therefore, as I said, this is, as I see it, this August is a seminal event to me, because all the central banks are looking at this now, and they know that there is a danger around, and that danger they have to be ready for it. They have no tools whatsoever. Raising rates or putting rates negative, it's not going to help it. There's absolutely no solution whatsoever. But that's the only tool they have, and they're not going to create any inflation, except eventually they will print so much money they will create hyperinflation. That's not what they want, but that's what's going to happen with the money becoming totally worthless instead. So sadly, we are in a situation where in my view, there's no solution, and therefore you should have a high percentage of gold and silver physical, and everyone's going to do what they're happy with. But I don't see so what else could you put money into today? There are things like water. There's a scarcity of water, so you could also farmland, which is productive farmland. It's of course good to have without debt, I would say, because you shouldn't have debt in these, even if there'll be inflation. Better not have debt. They might index the loans with inflation, and they might increase the interest rates so that you can't afford the loan. So therefore, it's better to be debt-free and to own assets like gold, like land. Water is also a valuable asset today. But otherwise, I wouldn't put anything into the stock market, the general stock market, wouldn't put anything into the bond market as we are discussing here indirectly with the debt. Bond market is the biggest bubble in the world, and that might have for a while lower interest rates and therefore still slightly higher bond prices. But that's going to turn one day, and that will be the biggest collapse ever seen in history when that bond market turns.
I think it's a little bit like, and I keep quoting this, I have a lifetime mentor, Egon, a gentleman by the name of Peter Daniels. I met him many years ago, but he said, and I'll never forget his comment, he said, "I do not care what poorly executed economic decisions are made in the world tonight, tomorrow I'll still be able to party." Because he's a billionaire with the B, very wealthy man, but he recognised the value of holding gold. And no matter whether or not the stock market crashed, the bond market crashed overnight, not only would he survive tomorrow, but he would be able to party tomorrow. And that's what I see. Gold provides that quality that nothing else can. You've mentioned...
Can I just say, gold, you're right, but sadly, we will not have the climate where we are going to party in the next few years. So because people have a very difficult time, and it's better to keep a very low profile and help as many people as you can around your family, friends, etc. Because a lot of people will need help. That's absolutely certain. But then also, I know I might sound gloomy with my forecast, but my view is that you put your house in order to the extent that you can. Everybody hasn't got a lot of money to save into gold, but you can buy a gram of gold every month for $50 or whatever.
Yes.
And most people could afford that instead of a few beers or cigarettes or whatever people spend it on. So everybody can save in gold. And I often take the example of the Venezuelans. If they had started that 10 years ago or so, they would have had money for unlimited food almost today.
Correct.
So it's not too late today, absolutely not too late. Even if you haven't got a lot of money, just save a little bit. And then once you've done what you can, most important thing is to enjoy life. Life is too good. Sure, we see a lot we're going to see a lot of misery in the coming years. But in the meantime, enjoy your life, help your friends and family, and you have things in Australia like we have in Switzerland. Also, nature is the most valuable, fantastic, free asset, free leisure activity, and gives so much pleasure. So everything, you don't have to spend a lot of money to enjoy life. Just by enjoying nature, for example, you can get fantastic return on that.
Yes. No, I agree. But you need some, and I think your comment just a short while ago was, I remember another gentleman coming up with a significant quote when he said, "Poor people cannot help poor people." And what he meant by that is, and he explained it to me, you need to have some reasonable wealth yourself, because if you do, then you can help somebody else. And you're correct. There's going to be a lot of people around you that will need support, will need help, family members. But unless you're in a position where you have reasonable wealth, you're not going to be in a position to help them. Hence the value.
You can help at all levels. You can help, you can help with people with little things, your kids, your family, your relatives, and everyone. I am a great believer in that everyone has a skill, and if you lose your job, there's always something you can do. And if you get a depression or you get a major downturn in the world economy, there will be alternative things that you can provide, services, etc. Because let us say that conventional services disappear, like a taxi service or delivery service or whatever, or on a bigger scale, maybe an airline. But you can buy all the assets of normal businesses now for a penny and the dollar, or you can start your own little business helping people with things that they couldn't get help from before. There are always people who are going to have some money. So I'm a great believer in that if you're prepared to work, there is always something to do, even in bad times. But if you sit down and wait for the government to actually give you money, you're going to suffer because the government is not going to have any money.
Yes.
And pension funds will be decimated and might not survive either in the coming years.
Egon, you mentioned something pretty important just a while ago. You mentioned that all of these currencies they've lost 97, 98% of their value since 1971. That's when it really all started, taking America off the gold standard. Do you believe that the American dollar will go to zero? I mean, it's lost 98% to gold to this point. Will it go to zero, in your opinion? And if it does, how long do you think it's going to take?
Oh, the dollar is, the sickest currency of them all. It's just maintained by debt and military might.
Yes.
And of course, we have still this, although the Chinese are trying to change that, but we still have the petrodollar. And most of the world trade is done in dollars, and all the oil trades, or the majority of the oil trade still. But nevertheless, the dollar is supported only by debt and as I said, by the military. So therefore, it's possible, and it looks like there's a possibility technically that the dollar will have a very short period of strength, but thereafter the dollar will collapse, in my view. And I don't know which currency will win the race to the bottom. If it will be the dollar, I wouldn't be surprised. Or maybe it can be any. It can be the yen also, because the yen is incredibly overvalued. I think the Japanese economy will sink into the Pacific at some point, because the government is the only one not just buying the debt, but buying all the stocks also, and the ETFs. So this is a very competitive race to the bottom. It's hard. I wouldn't bet. I would just bet across the board, say they'll all go to zero, and which one comes first, it's really almost irrelevant because they're all down so much anyway. But I'm absolutely convinced that the US dollar will also be among the first ones to reach that level.
Right.
Egon, I have another question here. Do you believe that, we all have seen China in the market, Russia in the market at the moment on the gold, with buying gold. So do you believe that countries like China and Russia will have greater influence on how gold can be used in the next monetary system, especially when they're stockpiling it on a monthly basis?
Russia, yes, have increased their gold holdings dramatically in the last couple of years, the official ones I'm talking about. China have not only to a much smaller extent, but we all believe that China has a lot more than just around 2,000 tons that they're saying they have, and some of us wouldn't be surprised if they have at least 20,000 tons of gold reserves in China. The US has officially 8,000 tons. Very few of us who are in this industry believe that those 8,000 tons exist. They are either been sold covertly or lent to the market. And when they lend it to the market or lease to the market, in the old days, it used to stay in the London pool primarily if they lease it to the market, the central banks. Today, the buyer is primarily China, India, and Russia. So all that gold now that's leased to the market, central bank gold, has now gone to the Far East or to Russia, and all the central banks via the bullion banks are the ones doing the transaction. All they have is an IOU, the central bank from the bullion bank, saying that I owe you so many tons of physical gold, which of course can never be delivered. I think I hope, coming back to your question, that there won't be a gold-backed currency again. I mean, I prefer the concept of free gold, that gold is not supporting anything, but is traded freely without a manipulated futures market, of course. Because whenever you tie gold to something else, whatever currency it is, they're going to start cheating again. And I'm sure that China will be under pressure. So they as we talked about before, so they will probably need their gold. But I'm sure that China will, if these trade talks fail and the US continues to put pressure on China, then I think that China will clearly, their gold is one of the weapons that they have, and they could easily challenge the US and back the yuan with their gold, and then tell the US, show us your money, show us where your gold, that you have your gold, which I'm sure they can't. But the biggest weapon otherwise that China has, if they really want to destroy the US, is, which means that they will also destroy part of their own assets, but they are aware of that and probably don't mind, is to dump their US Treasury bonds, of course, of 1.2 trillion or so. Then they will destroy US credit, and they will destroy the dollar simultaneously. And okay, so they will lose on their money, but they will make it 10 times on their gold instead, because they probably have, as I said, at least 20,000 tons of gold that they haven't declared, because they have put away gold for a very long period, the Chinese.
Of the many reports that I do read, including yourself, everybody except for Americans, I think they believe that the Chinese have got a few more tons than the 2,000 that they're putting on the market. But off the subject of gold for the moment, you've got an immense experience watching governments destroy themselves. Why don't you write a book about a gold standard? I'd be the first one off the ranks to buy that book, because we need around the world to know. We need to read something to show how a gold standard works. And when I say a gold standard, I'm talking about the physical, not necessarily gold-backed currency, but the physical gold. Have you had any thoughts about writing a book?
No, I haven't. I write a book every week, or a chapter, but I haven't. No, I probably won't. As I said, I won't. I'm unlikely to write that kind of book. And also, I'm not, as I said, I don't believe in the gold standard, because the gold standard is there to be manipulated. And it's much better if you have freely traded gold. And I think we will have freely traded gold for the simple reason that the whole of the derivative market, as I estimated, is at least the 1.5 quadrillion or more probably that it was before the BIS adjusted the figures to make them look better. So the official figures are now only 700 billion, but a trillion. But I think the official, the real figure is probably at least at 1.5 quadrillion. And that what needs to happen to get for the world to get back on sound footings is that obviously the debt needs to collapse. Before the debt has imploded, the world cannot grow soundly anymore. So you need an implosion of the debt, which obviously will, as we discussed, create enormous misery for a while. Because when the debt implodes, all the assets that were backed by the debt will also implode. And then, of course, with that will also be that the derivatives implode. But I think that is the kind of forest fire that we need now in the world. And the transition period, however long that lasts, will be bad for the people who are then who are alive at that point. But that is the only way that for our children, grandchildren, great-grandchildren, for them to actually start again and building a world which is based on, as I said, sound footings rather than based on debt and illusions, which is what we're talking about now.
Well, Egon, I disagree. I think you should write a book, but we'll move on from there. My last question before Darryl finishes off. In your opinion, what are the few powerful banking families that exist today investing in? In 2016, Jacob Rothschild stated that he was increasing his exposure in the yellow metal to 8%. Do you believe it could be more for these families?
As I said before, the old families, which includes the Rothschilds, have always had an important percentage in gold. So I'm sure that 8% is only his official stance, you know, a lot of these people, yes, own gold, but of course they have a lot of other assets that we don't. They have land and property, and also art. Their financial assets will obviously implode like everybody else's financial assets, but they will have enough of the rest to survive anyway.
Egon, you are never going to escape an interview like this without being asked this question, I am sure. Jim Rickards has been talking $10,000 gold. Keith Neumeyer is talking $200 silver without hyperinflation. In Australia, silver in Aussie dollars is up almost 30% for the year so far. So December 2018, we hit a low of 1938 Aussie spot. It's now 27.60. It's up 30% over just over seven months. A kilo of gold in Australia, October 2018, was priced at 54,500. Today it's 74,400. So it's up 20,000 a kilo. Now, what I'd like to know from you is what we can expect from here on. What are you expecting to see both metals do for the remainder of the year? What can we expect at the end of this calendar year?
I don't like making forecasts to a specific time point because they're.
I knew you would say that.
I hope I will live longer than 31st of December. It's not an important date to me. Let's say that. And therefore, that forecast is meaningless. If you talk about longer term, gold will continue to reflect the debasement of currencies, as we have discussed, and you know, sadly, your Australian compatriots, even when we've talked to them as a gold symposium and other interviews and articles, and most of them have not listened to the message, like nobody else in the world has either, of course. Yeah, I believe, Jim Rickards, we've discussed that even in an interview, that 10,000 forecast. Since I started seriously with gold in 2002, I mean, it's a little bit of an arbitrary target. There's 10,000. I think I've said since that time, more or less, that we will at least reach 10,000 in today's money.
Yeah.
So in today's money, not in hyperinflation or inflationary money. Jim Rickards arrives at it with a calculation, which of course, but then by saying we have whatever it is, 40% gold backing or something. So sure, you can do it backwards that way too. But I think let's say it's first of all, gold will, number one, reflect debasement of currencies. Number two, gold is extremely suppressed today in all markets. So therefore, gold will explode and it will become overvalued at some point, and therefore reach levels which maybe at the very peak it will come down from, but it will be permanently valued anyway, even if it won't stay at the frothy highs. $10,000 to me is just a starting figure, and that's in today's terms. I think we'd be a lot higher. We can talk about tens of thousands of dollars. And so, if you take $10,000 and say the gold silver ratio goes back to the historical level of 15, then you're talking about $650 for silver. And I think that's very possible too. And then if you do get hyperinflation, which I think is possible, then you add a few zeros. That's meaningless from a purchasing power point of view, but it's meaningful for the ones who don't hold gold and who only have paper money, like the Venezuelans today, for example, who have nothing. If they had gold, then they would have avoided all of those zeros and the destruction of their paper money. So therefore, let's just repeat what I said before. Gold is now starting the next phase and the next bull market, which is because central banks are now starting the next phase of money printing and the debasement of currencies. And therefore, we are in the gold market, both in gold and in the stocks, also precious metal stock. That is going to last for many years. So don't worry about the price. Don't worry about the levels. The time you're going to ride this bull market or bear market in currencies, if you're for a very long time, whether that's 5 years or 7 years or 10 years, I don't know at this point. We will have to read the market then. But until there is an alternative that you can use your precious metals for, i.e., you buy an asset for pennies in the pound or cents on the dollar, then until you can do that, you stick to your gold, because you're not going to put it back in the bank until you have a banking system that works. Sure, at some point, like in 1980, 81, when you could buy U.S. Treasury bonds with 17% return, we just saw the end of the inflationary period that we've had then in the 70s in Europe and in America. Then, of course, and the bank and the financial system has been restructured, and bonds will probably then be a fantastic bargain to buy, because they will be bombed out and interest rates will be very high. So at that point, for example, you might buy bonds, or you might buy a business which is a good business, but they need cash and they need investment. So there'll be so many opportunities at that time. But as I said, for anyone who holds gold, don't ever think about selling it or silver for a very long time now. You're not going to take profit, because any alternative will not be worth having. That's for certain.
Right. Makes enormous sense. And I've been very fortunate. The gentleman I spoke about earlier suggested I save in gold and save in precious metals. And both Brian and I have been doing that now for 20 years. Nearly 24 years. Yeah. So it's just a savings habit that we've incorporated into our life. Yeah, absolutely right. I mean, that's what people should do. That's what I'm saying also. Even now, it's going to go up now. The whole time people will say, well, it might look too expensive, but that's what people should do. They should just, as I said, whatever they can afford. Yeah. One gram a month is $50. If that's what they can afford, they do that. Can they afford more? They do that. Man, that's whatever you save in gold today, instead of buying that beer or buying those cigarettes or buying that coffee for 5 or 10. I don't know what it costs in Australia. These expensive coffees which cost $5, $6, $7 or whatever. Instead of buying that. Yeah. Buy a bit of gold. Yeah. Makes enormous sense. There you go. Look, it has been an absolute privilege, you allowing us to interview this evening. Look, I thank you very much for this. It's been, I know you're a remarkably busy man, and so we thank you so much for your time this evening. Just before we go, I would like to just once again refer to the upcoming event in October. That is October 24 to October 26. So it's a 3-day event. And you yourself, Egon, will be a keynote speaker at that event. I would go just for that. There wouldn't have to be anybody else speaking, and I would be there just for that. So I can recall a gentleman many years ago. His name was Charlie Tremendous Jones. He said, In 10 years' time, you'll be in exactly the same position you're in now, apart from two things: the people you meet and the books you read. And I thought it was one of the most powerful statements I'd ever heard. These events provide that opportunity. I remember that Brian and I and Jared went to an event held by Kerry at Port Douglas 3 years ago, and Jim Rickards was the keynote speaker. And Brian and I and Jared went for one reason, and that was to connect with Jim Rickards and ask him to come back to Australia and speak at our next conference, which he did, and that just turned out to be a sensational event. So this is an opportunity, I think, that no one should treat lightly. I'm hoping we get every Australian there, and we do have to change the venue to the MCG. But I'm really looking forward to it. We're all attending, and I'd love to think that our subscriber base and our viewers would take this seriously and be there in attendance. I think it's a must event. So, but before we go, I'd just like to ask you a question about Matterhorn Asset Management. I believe they are the largest vaulting service, private vaulting service in the world. And what I'd like you to do, if you could, just share a few thoughts with us, Egon, about Matterhorn Asset Management and Gold Switzerland. If you could just share with our viewers, our subscribers, because I'm sure many of them would really like to know what your operation involves, and if I'd like to contact you, how they could do that.
Yes, well, just between the two names, the name of the company is Matterhorn Asset Management. You can see the Matterhorn there behind me.
Right, yes, I love the colour.
That's where we keep our gold, as you can see.
Yeah, right. Yeah, lots of it. It is the biggest in the world.
No, so the name of the company is Matterhorn Asset Management. Gold Switzerland, which is also the name of the website. goldswitzerland.com is our trading name, if you want. And that's how they find us, goldswitzerland.com. So I set up the company many years ago as in the 90s as a private investment company. And then it was my private company, but then in 2002, we also advised a number of investors that, high net worth individuals and helped to sell businesses, etc. So in 2002, we said we should go into gold with our own funds and the people that we work for or advised. So that's what we did in 2002. And then we created this system of the best vaulting facilities, the best security, the best system for recording all of this, which we have not in the Matterhorn. We have the biggest private gold vault in the world, where we store gold for bigger investors. It's the biggest private gold vault and also the safest, which is in a unique James Bond experience. If you want, going there, the 9 levels of security zones, and the vault can only be opened by hidden security centers hidden in Switzerland, different places, etc., not by the people who are there, etc. So it's a very secure place. So that's for bigger investors, and then we have other vaults also. But really, it was started the business as a private business, and then in 2005-06 we opened it up. We became a Swiss regulated company and opened it up for outside investors. Now we are really what we are is specialists in wealth preservation. We're not a gold trading company. We don't buy and sell gold. We don't sell any gold retail to anybody. We only have clients that we advise and that we help to win their wealth preservation plan. And the biggest part of that, of course, is owning precious metals in the safest possible way. And therefore, so our passion is really understanding the world, understanding risk, talking to our clients about this. And we're lucky to have very interesting clients from around the world, and many of them entrepreneurs, and many of them are humble people for the simple reason that they, like you and we, are free thinkers and understand what's happening in the world. And therefore, they're not big-headed, they're not masters of the universe, but they actually understand that they need to protect themselves. And this is what we're doing for them. And so for us, it's a passion. It's not really, it's not a job as such. And I think we have created a very good system of wealth preservation. And we facilitate the buying and the storage for people. We are not a counterparty to anything deliberately, so they own the assets directly. They can go straight to the vaults without us, etc. And that's very important to us. And we have the pleasure of actually helping people who understand, as I said, the risks in the world and who are concerned. And therefore, for me, it's a real pleasure. And I am, as you can tell, I am way past retirement age. But to me, this is so much fun and important at the same time. So therefore, we really enjoy helping other people so well. So it's all about, it's more about values, about honesty, integrity, about risk, rather than buying and selling gold. That's just gold to me is not at all, that's not what we are all about. Gold is a consequence of my risk analysis and our thinking of the world. It just happened to be that gold is the best way to insure against what we see. But then, you've got to do it in the best possible way, and that's what we are doing. And if people want to contact us, goldswitzerland.com is the website.
Okay, fantastic. I was going to ask you that if any of our entrepreneurial viewers were interested in making contact, that would be the process. Yeah. Yes.
So we start at $250,000 in Swiss francs, and then for the mountain vault, it's the 5 million level for the mountain vault.
Okay. Thank you very much. Okay. Look, Egon, once again, I would just love to thank you so much for your time. It has been absolutely a privilege sharing some time with you this evening. I would like to also thank our viewers and our subscribers who are so very important to us. We'd love to thank you all for your ongoing support. And until next time, stay well, stay focused, and goodbye for now. And thank you so much again, Egon. Very much appreciated. We'll see you at the upcoming event.
Thanks very much. I enjoyed talking to you, and I also look forward to seeing you soon in October.
Fantastic. Thank you.
We'll see you there, Egon. Thank you very much.
Very good. Thank you.
Bye-bye.
Bye.